You are tuned in to the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here, we do strategy. 5 minutes on the clock, let's get to work. Yesterday, the global energy market experienced a masterclass in psychological warfare. Brent crude, which had been testing the structural integrity of the global economy at nearly $120 a barrel, suddenly buckled. In a 24-hour span, we watched prices tumble nearly 20%, retreating back toward the $98 mark. The catalyst? Not a sudden surplus of supply, nor a drop in demand, but a single series of statements suggesting an imminent resolution to the hostilities in the Middle East. The markets, starved for stability, clung to the word soon like a life raft. Stock indices in London and New York staged a relief rally, but for the discerning strategist, this volatility is not a sign of recovery. It is a siren's song. This matters because it exposes the terminal fragility of the legacy energy trade. If your economic fortress depends on the stability of the Strait of Hormuz or the diplomatic whims of a single administration, you are not building a fortress, you are building a sandcastle. The real news yesterday wasn't the drop in oil, it was the massive capital rotation that occurred beneath the surface. While retail investors were chasing the peace bounce in traditional equities, institutional capital continued its quiet, relentless migration into AI-integrated energy infrastructure. We are witnessing the birth of a new asset class, the Electron Fortress. This is the marriage of sovereign power generation and hyperscale compute. It is the only sector currently showing a total decoupling from geopolitical oil shocks. The hard truth is that hope is the most expensive emotion in business. Betting on a permanent de-escalation in the Middle East is a fool's errand. The geopolitical risk premium is now a permanent feature of the landscape, not a bug. Furthermore, the internal combustion era is being cannibalized from within. Even if oil stabilizes, the demand for volatile molecules is being structurally replaced by the demand for reliable electrons. The AI build-out is currently consuming power at a rate that rivals mid-sized nations. If you are still holding heavy positions in speculative energy ETFs like USO or XLE as a safety play, you are holding a depreciating hedge against a world that no longer exists. The grit of the situation is simple. Traditional oil is now a casino, while AI energy infrastructure is the house. To defend and grow your wealth in this environment, you must execute 3 tactical moves immediately. First, liquidate speculative energy positions on the current dead cat bounce. Use the temporary price stabilization from yesterday's news to exit over-leveraged oil futures and legacy exploration stocks. Capital is currently more productive elsewhere. Second, pivot your exposure toward grid proxies. Look specifically at private equity-backed firms that own and operate nuclear or on-site natural gas generation dedicated solely to data center clusters. These are the tolling booths of the new economy. They collect revenue regardless of the global oil price because the AI models cannot be turned off. Third, invest in the sovereign AI compute supply chain. Focus on companies providing the physical cooling and power management hardware for these energy fortresses. As grid constraints become the primary bottleneck for AI, the companies that solve for power density will see the highest Capex inflow. The molecules of the past are failing. The electrons of the future are where you plant your flag. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor. This content is not a substitute for professional, financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.